Okay, so trade recap. I took some bunch of trades on Friday. The Friday has no news, which is tend to believe I tend to believe that Friday might be a small range day, and it was a small range day, like this small range. So let me start off with the bias. All right. So I had the reason to go short, and I had the reason to go long. Okay. The first reason to go long is that 4 hours time frame was bullish. Okay. 4 hour time frame was completely bullish, expanding to the upside. All right. And as long as 4 hour bullish, 1 hour was bullish too. And if there's a sweep of 4 hour low and a 1 hour low and retraces back to the 4 hour equilibrium or 4 hour bullish Ferrari gap, I would look for longs based on 5 minute price action. Okay. And the first trade that I took was based on 5 minute price action. Okay. And the another reason to go long is that we had this high, okay, this 4 hour high, which pretty much equal high with this pre-market 4 hour high, right? So that's a liquidity generation, and then price pushed back to the sweep liquidity, and then retraces back to the 4 hour bullish Ferrari gap, and then price just pushed to the upside, right? And the bearish reason for me to look for short is that in a daily time frame, the bias was bearish. All right, bias was bearish. We broke structure here. We already hit equilibrium. We're trading at the bearish daily Ferrari gap, so that's a thing to go look for shorts. And the 4 hour range equilibrium and 4 hour Ferrari gaps that needs to get filled, but Friday didn't retrace. Price Friday expanded higher, which is dollar became stronger. No. Dollar became weaker, and US 500 became a little bit stronger on Friday. Okay, maybe it's because unemployment rate um was bullish, so ES just followed it. Okay, so if there is like less unemployment rate, index and bonds will push higher. Okay, if the interest rate is low, okay, if the interest rate is low, that means the companies will take a loan from the banks, so they will pay a less interest rate, and then their workers, their employees won't lose their job. So it is great for ES 500. All right, if the unemployment rate is lesser than the previous unemployment rate. Okay, so unemployment rate news was that came out on Thursday, right? And then maybe Friday wants to still follow the 4 hour Thursday unemployment rate. Unemployment bullish news came out to the upside, right? And the trade that I took was okay. We swap out this 4 hour lows. So this is my strategy. Okay, this is my strategy that perfect example of it. So we know that 4 hour was bullish, 1 hour was bullish. So all I need is 1 minute breakup structure to the upside, right? Okay. Okay, I took trades pre-market, okay, before market open. So we swept out higher time frame liquidities and retraced down into the 4 hour bullish Ferrari gap, and we did a bullish BPR. Okay, we retraced back to it, and if there's a 1 minute reaction, I definitely can long. Okay, but the more high confluence, high confirmation trade is that okay, we broke 5 minute structure to the upside, which is exactly according to my strategy. We retraces back to the 5 minute bullish Ferrari gap, and there was a 1 minute reaction to the upside. So I took it. This was a 1 to 2.65. So I took profits off of here. I think I actually closed all of it actually here, and then price. Otherwise, price would reverse it, and I would have got stopped out. So this was a 15-minute highs, and there must be some. Yeah, I think this is 30-minute for YGAP, and this one is I think it's 30-minute for YGAP too. Yeah, this was the 30-minute for like it, but it doesn't really matter. So the second trade that I took was um so the second trade that I took, oh yeah, the 5 minute retrace back to the Ferrari gap, and price did uh bullish reaction to the upside, right? So that's where I'm entered. Okay. The next trade that I took was, so 4 hour low got swept, 4 hour bullish Ferrari gap. So there is a high chance that price would trend line bullish to the upside to sweep the London high, okay, which is right here. This is 5 4. Okay, this is London high, okay. And the second trade that I took was that after breakup structure and bullish Ferrari gap, we reversed it again. We reversed it with a breakup structure and inversion gap. So that's what I'm entered, but I didn't realize that price already did a bullish SMT, so I lost it here. Okay. On the second trade that I took was that after the trend line is confirmed, I tried to cut the retracement lower. So the retracement was that the confluences that I wanted most, which is a buy sell, which is 1 minute breakup structure to the downside, aligned with the bearish inversion Ferrari up to the downside. That's what I'm entered. Stop loss above the bodies of the highs. Okay, and then targeting the 5 minute bullish Ferrari gap. Okay, the equilibrium of the range would have been more profitable and would have been more logical, and it would have been hit. All right. And the second trade that I took was that after the expansion higher, so equilibrium got hit, 5 minute Ferrari gap got hit. We did a bullish BPR, retracement back to it, breakup structure to the upside, right? But there was a bearish Ferrari gap that declined, that's just reversed it back to the range, okay? So when that happens, there's that drop caused breakup structure aligned with the inversion gap to the downside. So that's what I'm entered. Stop loss above the 5 minute high. I think. Yeah, pretty much 5 minute high. Okay, and then I should have targeted the 1 minute lows or 1 minute Ferrari gaps, which can cause a reversal movement against me. So there was nothing. There's nothing in. There's nothing in. There was nothing. So there was. So there was nothing in 5 minute and 15 minute that can potentially show some reversal price action to the upside against me. So yeah, I pretty much should have looked for 1 minute lows and 1 minute Ferrari gaps to take some partials off. Okay, and if I waited, not just took short off of at discount and wait for equilibrium and wait for premium price to get hit and then wait for like break of structure, if I waited for that and entry off of here, that would have been a way better, yeah, risk. Okay, okay, and then should have taken some partials off of this 1 minute Ferrari gap, but there's a lack of chance that I would take because 1 minute Ferrari gap is not that strong reactionary. 1 minute lows can be strong reactionary points, okay, because it is liquidity. Okay, so these are the trades that I took. Okay, on Nasdaq I took two trades. Yep, which is it's pretty much the same. Higher time frame was bullish. Hourly lows got swept. We pushed into the Ferrari gaps. Okay, so after the 15-minute highs got swept, there was a confluence. So sell buy sell. That's a break of structure, aligned with the bearish BPR, aligned with the bearish inversion gap to the downside. Prices retraces back to it, took off. Okay, I entered off of there, and so when price dropped to the downside like that, at break even, which is not that good decision. I should have put my stop loss at the high that formed in drawdown. Okay, and that would have been way better. Okay, so prices generated liquidity, and this is bullish SMT. Price never take it. This generated liquidity and then push to the upside. And why price is retraced? Because price wanted to push higher. 79% push higher. Okay. In this example, 79% retracement levels. Price pushed back to the 79% retracement level, and then price just pushed to the upside. All right. So that's a thing. Okay. What is the moving average saying? Okay, on the second trade that I took was that I just sold at discount. I should have sold at premium. Okay, so the trade confluences was that price retraced back to the silver bullet 5 minute bearish fair value gap. We did inversion of fair value gap. We did inverse fair value gap to the downside. That's what I entered and got stopped out immediately. Okay, so after that there was a buying potential because okay, so these are the trades that I took, which is uh, 1, 2, 3, 4, 5, 6, 7. So which is a 7 trade recap. Okay, I took 7 trades on demo account. Okay. So yeah,